Are you tired of missing out on potential profits? Let's learn how to spot a powerful bullish reversal pattern, the Morning Star. Candlestick charts are visual representations of price action over a specific period. They provide insights into market sentiment, momentum, and potential future price movements. So, what is a Morning Star pattern? A Morning Star is a bullish reversal pattern that signals a potential end to a downtrend and the start of an uptrend. It consists of three candlesticks, a long bearish candle, a small body candle, and a long bullish candle. The long bearish candle indicates a strong downward trend. The small body candle is often called a doji candle, and it shows indecision in the market. The long bullish candle, which gaps up from the small candle, and closes above the midpoint of the long bearish candle, signals a reversal of the downtrend. Now let's try to understand the psychology of the buyers and the sellers behind the formation of a Morning Star pattern in the chart. Typically, the market is in a short downtrend, and as the price approaches a support area, some sellers try to push the price below this support level thinking that the price will break the support and go much down below the support. This effort of the sellers results in the formation of a long bearish candle of the Morning Star pattern. The next candle opens below the previous one. Sellers again try to push the price lower, but weak selling pressure and profit booking by the seller who have already shorted up prevents the price from falling significantly. Additionally, new buyers start entering near the support area, causing the price to close slightly higher, forming a small indecision candle or the doji candle of the Morning Star pattern. The color of this candle can be red or green. Seeing this indecision candle or the doji, the new buyers start heavy buying, pushing the price upward. This results in the formation the long bullish candle of the Morning Star pattern, and thereby, completing the Morning Star pattern. When the price moves above the previous bearish candle, sellers exit their positions to protect profits, further strengthening buying momentum, and the continuation of the new uptrend. Now, let's analyze a real-world example of the Morning Star pattern on the chart of EUR/USD in 5 minutes time frame. So, here we can see a significant downtrend in the 5 minutes time frame. At the end of this downtrend here we see a long bearish candle, and this indicates a strong downward momentum. Then a small-bodied candle or the doji candle gets formed. And after that, we can see here a long bullish candle is formed, and this bullish candle gaps up above the doji candle, and it closes above the midpoint of the long bearish candle. This signals a potential end of the downtrend and the beginning of the uptrend. Now, what should be our approach for trading this Morning Star chart pattern? Number 1. Wait for confirmation. The bullish candle should close above the midpoint of the bearish candle. Number 2. Use stop-loss orders to protect your profits and limit potential losses. Number 3. Consider using other technical indicators to enhance your analysis. For example, when the Morning Star pattern forms, then apply the MACD indicator to your chart and look for the MACD confirmation. If the MACD line is below the signal line when the Morning Star pattern forms, and then crosses above the signal line as the third candle forms, it can be seen as additional confirmation of a potential bullish reversal. Number 4. Check trend the higher time frames also. Your trade in the shorter time frame must align with trend the higher time frames. For example, if you see a Morning Star pattern in the 5 minutes time frame, then you may consider buying, only if the trends in the daily time frame, 4-hour time frame, and 1-hour time frame are uptrends. Now friends, let's recap the key points that we learned in this video. The Morning Star is a powerful bullish reversal pattern. It's important to wait for confirmation before entering a trade. We must always use stop-loss orders to manage risk. To learn more about candlestick patterns and trading strategies, subscribe to our channel and hit the notification bell. Together, we can navigate the markets with confidence and achieve financial success.